The stock market has three basic states: uptrends, downtrends, and sideways or range-bound movement. When we are in a downtrend, managing your portfolio is pretty simple. Just stay in cash and don't fight the trend. On the other hand, a range-bound market can be very frustrating for trend followers and very hard to navigate in terms of portfolio management. These typically have a lot of back and forth action and no real momentum to the upside or the downside. But today, we're focusing on uptrends. Not all uptrends are created equal. Some are stronger than others. Some demand that investors be more aggressive with adding exposure than others. It's extremely important to know how strong the current uptrend is so that you don't miss out on fully taking advantage of potential gains. One key way to gauge an uptrend's strength is the power trend. According to IBD research, the power trend is your signal that it's time to be very aggressive with your portfolio. IBD investors are all aware of the distribution day count and how it can be a great tell for when to get out of the market. However, it's not always a telltale sign of what to do. IBD's founder William O'Neill would sometimes see a distribution day count of 7 or 8 and say that it's still not time to get out of the market. So what was signaling him to act counterintuitively to a high distribution day count? You guessed it, it was the power trend. Now let's get into the specifics of how to identify a power trend. This part is essential because investing can play tricks on your emotions, making it difficult to see, think, and act clearly. Especially when we've taken some losses, pushing on the gas can feel a little scary. In this case, it's always best to rely on black and white rules that tell you exactly what or what not to do. A power trend starts when these four things take place simultaneously on a major index. First, the index's intraday low needs to be above the 21-day exponential moving average for at least 10 days. Next, the 21-day exponential moving average must be above the 50-day simple moving average for at least 5 days. Then the 50-day line must be in an uptrend for at least 1 day, and the market must close up for the day. Let's take a look at an example from 2009. The market bottomed in early March of that year and began rising higher. Then, in late March, the 21-day line crossed above the 50-day line. The 50-day line was already nicely in an uptrend at that point. On April 2nd of 2009, the 21-day line had been above the 50-day for at least 5 days, and the Nasdaq's intraday low was above the 21-day line for at least 10 days. Thus, the power trend began. When a power trend turns on, it's time to recognize that you're in something special, that this uptrend could run a lot longer than anyone is expecting it to, and it is time to be more aggressive. But where does it end? How do you know when it's time to pull back on exposure and protect your capital again? A power trend typically ends when the 21-day crosses back below the 50-day line. There are a few other events that can also turn off a power trend early. One such event is a follow-through day failure. That happens when a major index closes below the low of the initial follow-through day. As IBD investors know, a follow-through day occurs when, on day 4 or later of a rally attempt, the market delivers a strong gain in volume up from the previous day. But if the low of that day is undercut, the follow-through day has failed. Another event that can end a power trend is the circuit breaker. IBD's circuit breaker is slightly different from the typical definition. Under the IBD trading philosophy, these are triggered by a break of the 50-day line while the Nasdaq is more than 10% off the most recent high. It's important to remember that a power trend doesn't mean that you let go of your discipline or your rules. It's more important to stay on top of these, especially as you're maximizing your exposure to the market. Instead, power trends mean it's time to prioritize more aggressive growth names and take full advantage of those breakouts and buying opportunities. It also means promptly pyramiding into those positions that are showing progress. A power trend is the time to try to let your winners run. When you have significant gains in a leading stock, try to give it more room to work rather than take profits too quickly. Finally, if you use margin, this would be the only time you'd want to think about using it. If you're being more aggressive, always remember to follow your risk management rules. That includes selling when you're down 7 to 8% from your purchase price and buying only when a stock moves above a proper buy point.